Hi everyone, welcome back to my channel World Through Veera. Today's topic is PPF, Public Provident Fund. All Indian residents are eligible under individuals, no joint, no companies or no trust allowed. Minors allowed but with guardian. NRIs cannot open new account but they can continue if they have any existing account while being Indian resident. On maturity, they need to close. Once 15 years completed, the closed account, the money will be deposited into their rupee NRI Indian accounts. Silent futures, tenure of 15 years, and then it can be extendable in the blocks of 5 years, and this 5 years extension can be done a number of times. Minimum amount for a financial year is 500 rupees and maximum amount is 1.5 lakh rupees permissible. To keep the account alive, one has to pay the minimum 500 rupees in a financial year. Income tax benefits, contributions deductible under ATC falls under triple E. It means exempt and exempt, which means the deposited amount, interest earned and maturity amount in hand are income tax free. The government guarantees for principal and as well as for the interest. It's a risk free assured return with quarterly interest calculated and yearly compounding interest credited annually on 31st of March every year. It will be added into your PPF account. Current interest rate is 7.1%. Loan facility available from 3 to 5 years of the account opening and continuing in the account depositing money. Partial withdrawals allowed after 5 years. 50% balance from end of the fourth year. Loan available in case of emergencies up to 5 years. Loan interest will be 1% more than what interest they will be paying us. After 6th year, no loan can be taken, then partial withdrawal only allowed. Account can be opened simply designated bank or post office with form filling and minimum KYC. In banks, State Bank of India, HDFC Bank, ICICI Bank, Axis Bank are allowing to open the PPF accounts. Online facilities available. You can deposit money online, you can open the account online, you can close and withdraw the money online, or in case of any emergencies also you can take loan or partial withdrawal can be done. Then we get same month interest while calculating. If we deposit before 5th of every month, the interest will be payable for that particular month also. Only one account for an individual permitted. If we deposit before 5th and monthly 12,500 into 12 months, it's equivalent to 1,50,000. That is the maximum limit permitted for every individual for the PPF account for yearly deposit. And interest of 5,695 total balance on 1st of April next year. So total will be 1,55,695 and next year again if you add 1,50,000 then your interest will be on 1,55,695 plus 1,50,000. If one deposits yearly before 5th April 1.5 lakhs, then on 31st March next year interest will be 10,650. This case I am telling entire 1,50,000 deposited on 5th April. If we pay every year on or before 5th of April or 15 years tenure. After closure of 15 years, principal paid will be 22 lakhs 50,000, interest 18 lakhs 18,209 rupees at the rate of 7.1% compounded for 15 years. Total amount received in hand rupees 40 lakhs 68,209 9. This entire amount is tax free. This is the greatest feature available with the PPF. PPF is normally, as we told, risk free and government guaranteed, and who wants to have a safety for their principal as well as assured returns over a period of time, they can definitely opt for a PPF. And PPF is a long term investments category, and people can take it in entire family separately, for wife, husband, kids. Wife and husband, they can use it for their future retirement plan, or when they are going to buy a house. And kids, when you are investing that money after 15 years, if you don't require, you can extend it 5 years block basis. When they are in higher education or they are going for an MS into other countries like US, that money can be used. So please go ahead and invest in PPF. PPF, as we already discussed, it's a very good instrument for a retirement purpose to create. And after retiring, every year you can take the money from the PPF. In the month of March to April, 15 years PPF can be utilized it. When you are withdrawing in a yearly, every year from April to March, one time you can withdraw money, and you can extend the account in a two ways. One is with depositing money, you can extend it, or without any depositing, only you can extend it for earning the interest. So 5 years block you are investing, then whenever you require money you can take it. Otherwise, it will be keep on interest earning, and the interest or principal and total money received in hand is interest free. Go and invest. The downside risk will be you have in 15 years, if any interest rate goes down in the PPF or small saving schemes which is specifically declared by government, that is the only risk you carry. Otherwise, it is a very safe one. Government gives the guarantee for your investment as well as the interest. Thank you. Signing off, World through Vira. Don't forget to like, share, and subscribe.